U.S. indices are breaking down in a big way on Friday, September the 9th, and we're now looking ahead to a big speech on Monday, September the 12th from Fed Governor Brainard to see if she can save the stock market or if a seasonal correction is getting underway. September is historically the worst month of the year for U.S. stock markets. The week period runs from mid-August through mid-October, but in August oftentimes the first part of the month might carry it, or in October the last part of the month might carry it. September is the one full calendar month within the week time of year for stocks. This year so far, though, we haven't had much. Markets had been fairly straight, trading fairly sideways and holding up reasonably well. Here now we're starting to see support give way and seasonal correction getting underway. The question is this a one-day drop or is this the beginning of a deeper correction that could run for the next several weeks, perhaps through as far as the U.S. election in early November? The reason we've seen the markets start to turn is a hawkish shift in sentiment. Over the last several weeks, really since the Jackson Hole conference in August, we've seen Fed members generally talking more hawkishly and generally speaking that the data has been coming in fairly well, and a lot of speculation on whether or not the Fed may raise interest rates in September. Previously, a lot of people had thought that they would wait till after the election for December, but talk has moved forward over the last few months. At the same time, the threshold among in terms of U.S. job growth needed to by Fed members to justify a rate increase has been falling as well. It seems like more and more of them are getting ready. The real kicker this week, though, has been the ECB meeting. A lot of people were thinking that, well, how can the Fed possibly raise interest rates when the ECB is bringing in more new stimulus? The ECB went neutral. They said they're not bringing in any new stimulus. They didn't even talk about bringing in new stimulus, and that left the door open for the Fed to raise interest rates because the gap between the two would not be quite as far. So, where does that leave us now is with a speech from Fed Governor Lael Brainard on Monday. She is one of the most dovish members of the Fed, particularly among their permanent voters. So this really, her speech could be seen as the dove's last stand before the September Fed meeting. In terms of the big three at the Fed, historically we had Stanley Fischer leaning hawkish, Janet Yellen going right down the middle of the road, and William Dudley leaning to the dovish side, the president of the New York Fed. In August, Dudley went from dovish to hawkish and basically saying that he thinks you could see rate hikes this year. We've had a number of other Fed members recently talking about rate hikes this year. George, of course, has been hawkish for a long time, but we've seen regional presidents like Mester and Rosengren and Lockhart and a number of other ones also. So with the dovish camp, it's been getting smaller and smaller. So it mostly is down to Brainard and Bullard, the regional president in St. Louis. So this is the dove's last stand. If she comes in dovish, that could help to keep some questions open about whether the September is a live meeting or not. If she says anything about it being a live meeting or takes any kind of a neutral stance at all, people could take that as another shift towards the hawkish side. So keep an eye on that as we move into Monday. On the interim, what do the markets look like on the charts? We have a big rollover here in the Dow. Look at this. We had a descending triangle forming. We've had a double top at least, and now we've had a break of the 50-day average. And look at this. Once we had that boom, big downward candle, it's given way. RSI below 50, driving lower. U.S. market momentum is rolling down. We've broken this 18,360 here, trading near 18,235. Next support is here at 18,150, this former resistance level, then the 18,000 round numbers. So we could see some continued declines in the U.S. markets now that we've seen this start to give way and the floodgates start to open. Looking at the NASDAQ now, we're seeing the same sort of thing. In this case, it looks like we may have a short-term 1-2 triple top, and we're breaking down here too, taking out this first support, channel support around 47.50. Here, 50-day moving average around 47.08, and this previous low here is in and around 46.92. So we do have, and also again here, break of the RSI under 50 signals momentum turning downward for the NASDAQ. Also looking at the S&P here, we're seeing the same sort of action again, with the market rolling over from a double top starting to break down. We've got the RSI breaking under 50 as well. So we're seeing the U.S. markets really confirm each other. And look at this also. Again, taking out its 50-day moving average here. We've got significant turns to the downside, another double top here as well. So we've got a real seasonal correction starting to get underway in the U.S. markets. One more chart I'll quickly show is gold. Gold, of course, trades contrary to the U.S. dollar. So when we have a dovish moves that knock the U.S. dollar down, gold spiked up like we saw here at the beginning of September following some of the purchasing managers' reports. Gold has been backing off. Gold has gone back under its 50-day moving average near 1330. Gold failed at a lower high near 1350. A big support for gold is in this 1290 to 1300 area near a round number and this Fibonacci cluster as well. And look at gold's RSI sitting on 50. If it breaks that, would be more confirmation again. A downturn in gold would be an upturn in the U.S. dollar. Along with the upturn in the U.S. dollar, treasury yields have started to rise as well. People starting to think towards higher interest rates. So we're really at a key point for the markets here, and a big event coming up on Monday.